Good morning. Tell you what, it's a great time to do a presentation after Warren has been up, being a copper producer and a market cap of just 1 point something EBITDA. So that's a great lead into the presentation. Just getting into it. So Aeris is a producer. We produce about 25,000 tons of copper metal out of our Tritton mine in New South Wales. We also do about 40,000 ounces of gold out of our Cracow mine in Queensland. And then we got two projects, the Jaguar mine, which was a mine which we put into care and maintenance about 2 years ago when we were working on a restart strategy. And then Stockman project, which is a project in Victoria. That's a greenfields project which we will kick off in the next 2 to 3 years. There you can see, listening to Warren, in the last 2-3 months, we've gone up by over 200%. We're sitting at a market cap of about $550 million. And when you go through the numbers I'll put up, you'll see our EBITDA is probably north of $300 million. So, even at 4 times, it'll be a healthy situation. So the target production for us for this year is around 25,000 tons of copper, 50,000 ounces of gold, 250,000 ounces of silver. Investing quite a bit of money into capital. We're investing about $70 million with the restart of a cutback of an open pit mine. That's all happening in the first 6 months. So by January, we will start to produce ore from that open pit mine. And it's the first time, and I've been involved for 12 years now in this business, where we're putting $20 million into exploration in this financial year. So clearly the strategy for us for FY26 is focus on the operations and increasing life. And that's the reason and the background of the exploration plan. At Tritton, we are working on, and in July we will start the new mine, which is Constellation, and I'll just touch briefly on that. And at Cracow, it's a narrow vein, high grade gold mine. Unfortunately, it's always a 2-year reserve, but it's been that for the last 20 years. There's a few interesting opportunities there, which we'll touch on very, very quickly. And then the Jaguar mine, we bought it 3 years ago. We put it in care and maintenance 12 months after, when the zinc price dropped by 30%, and we had to invest capital to get to the next project. We have made the decision this year to drop the care and maintenance costs to as low as possible and actually drill base metal targets out and create a 10-15-year mine plan before we will start it up. We're not going to start it up on a 5-year short life mine life and hope for the best. So we'll put about $3 million into exploration on the Jaguar mine. In Stockman, that's a good reserve-backed project. It's got 12 million tons at over 4% copper equivalent grades. The studies we're working on, there's 3 studies, a normal flotation circuit, one which includes technology, which is the Albion process, and one which will include an acid circuit because it's got 50% pyrite in the ore body. Those studies will be completed in the next 2 to 3 months, and then we'll decide which is the best way forward for the project. I'll just touch on a few slides due to timing. There's quite a few slides. So Tritton is in New South Wales. It's been mining for 20 years. Typically, we got a 1.8 million ton process facility. We will truck from about 2 to 3 underground mines currently into the mill, and forecast is produce 25,000 tons this financial year. We have started an open pit cutback, and that's part of the reason when you look at the production increase, where we historically did about 20,000 tons over the last 3 years. The kick in that production is because of additional tons from the open pit cutback, which will keep the mill full and running at maximum capacity for the next 18 months starting January. So a good uplift, and there you can see the Murrumbidgee pit, those tons. So you basically roll nearly 1 million tons into the next financial year because you're producing quite a bit of tons. So the first 6 months, we will invest $50 million in the pre-strip. The second 6 months, you basically make your money from the open pit for the next 18 months, really, from the open pit while you produce those tons. This is the game changer for Tritton. This deposit we discovered about 4 years ago. It's now at a position where you can see there's already 8 million tons at 2% copper and 0.6 gram a ton gold. That is, we are getting full value for the gold. The original thought was going to be a small open cut and then go underground. The latest outlook is there will be an open cut mine for about 4 years, and you'll go underground in year 2 of the open cut mine at the same time. So you'll mine those. That project will have a 10-year life in itself, just with the known resource. And we know it's open at depth, and you can see there are quite good grades down the bottom, so we still need to extend that mine into the future. As I said, it's ramping up of exploration. We're putting 80,000 meters into drilling this financial year, which is significantly higher than any others in my career with this company in 12 years. And it's all about the extensions of the known resources. All these mines extend at depth, just hasn't been drilled. We are focused on getting ahead so that you can have a 3 to 5 year reserve position for all these assets. And then you will bring in the Constellation deposit, and that will be supplemented with these other underground mines as we extend those lives. Cracow, that's our gold mine in Queensland. Very neat, tidy plant. We bought it from Evolution Mining 5 years ago with a 4-year life, and 5 years later we say we think there's a lot more than 4 years life. It's just the nature of the ore body. It's got 500,000 ounces in resource. Small reserve, but it has been one of those which you replace with your mine on a regular basis. The real opportunity for us in Cracow is that southern vein field, which is most of our production is coming out of the western vein field currently and has been for the last 20 years. The southern vein field is where the focus is going to be for greenfields exploration on that property. And the western frontier. So this year we're putting some target drilling into those areas. But one of the unique opportunities we've identified is actually in the Golden Plateau deposit, where it was mined in the 1930s at 10 gram a ton by the old timers, and a lot has been left behind. You can see all that white space as you look at that image. And there's an opportunity for us to actually put an open cut mine over that and have a certain life for at least 5 years of open pit mining. So right now we're busy doing some drilling. We'll kick it off in the next month, and that will define that project. Now, if you can have a 3 to 4 year defined life with that plus your underground, it buys you time to do the greenfields exploration and bring that into production as you discover those. And this gold price and 40,000 ounces, this little mine makes good money. The Jaguar mine, that was, as I said, when we bought it, it was in production. We put it into care and maintenance. We looked at restarting it as soon as possible, but we have made the decision this year that let's drop the care maintenance cost to as low as possible. There's 8 really good base metal targets, which has never been tested at all. We'll put $3 million in, test those, and obviously if you find something, you'll put more money in. But let's create a 10, 15-year life before you start. Because the market always look at these things. You start it up with a 5-year plan, the view is, when are you shutting down? If you've got a 10, 15-year life, they've got a view it should extend. And really, that is, it will require a bit more capital to start it up. The plant is, everything is in good condition, but you need life, and we will make sure we do that. The unique opportunity here is, of course, we're sitting in the gold belt in WA. We got Thunderbox and King of the Hills to the north and south. Both of those large gold deposits, each one of those yellow blocks is actually gold anomalies on the property. Hasn't been tested. We will start to do some testing on those. And if you find gold, the gold miners will come and either buy it or you talk to him through that. That's just the upside for JAG as we move forward. I sort of already talked about Stockman. That's really the big project. It will require, we're using technology, we're using normal float circuits. We should know in the next 3 months how does the valuation look for that project. It's a strong grades, good project, a lot of upside on exploration, but we need to finish off the studies. We're also selling, we got in North Queensland, we got some copper assets and copper exploration tenements. we're in the process of selling those, so divest the smaller assets to focus on the larger assets in the portfolio. And that's me. Sort of where we are. We have had a great run, and on the back of Warren's comments, I'll take it. You know, we're looking at about $300+ million EBITDA, so make your numbers. Thank you very much.